Hello and welcome to Invest Like a Guru. Now this is the second episode of the little series where we are investigating the dual momentum investing. If you haven't seen the first video in this series, I urge you to click at the link in the text below and you can see the entire video there explaining how the entire concept works. Now basically, just to give you a quick summary, dual momentum is a strategy. It is thought out of Gary Antonacci here. He wrote a book about it that is quite famous. And well, what it does is it have some very basic rules where it compares the S&P 500 to treasury bills, and from that it is determining if it should go in stocks or bonds, and if it should go in stocks there are some simple rules as which stocks it should use. Now what we took a look at last time, if we just go over here, is the original dual momentum that over the last 13-14 years back from 2008 has a CAGR, a compound annual growth rate of 8.59%. This is significantly lower than the original GEM, Global Equity Momentum here, dual momentum strategy. They look back in the 70s, and it seems like in the last 13-14 years it hasn't performed quite as well, although the year-to-date return is almost 21.5% from a very simple strategy. Now what we should focus on here, if I just may draw a bit, is the Sharpe ratio. That is where we take the CAGR and divide it by the volatility. So we should look at the Sharpe ratio. We might want to have a look at the max drawdown as well, which is important. And of course, the CAGR, what is the average return per year? So that is what we're going to have a look at. And in the last video, we tried to improve this strategy a bit by, instead of going between the rules that Antonacci told us to do, if we should be in S&P 500 or the world index, excluding US equities. Instead of that, we tried to go a bit of another way by taking a look at large cap and small cap instead in growth and value stocks. So that is what we did there, and that actually brought us up. As you remember, the original dual momentum had a CAGR at 8.6% approximately. And this new dual momentum that we had in the last video gave us a 10.85%, which is significantly better. So instead of ending up starting with $100,000 here, we ended up at $318,000, meaning 218% return over these years. The new version that we had here actually ended up at 350% instead of the same amount of years. That is quite a significant difference. Now you also may remember that the Sharpe went up from 0.56 to 0.7, which is also a big jump, and the max drawdown went from 33%, 34% here, and up to or down to, you could say, 21.6. So you cut about a third of the max drawdown, which is also important. Now in today's video we have some further improvements. Now these original rules, you simply just took a look at the 12-month performance. What we have tried to do today is that instead of looking 12 months back, we are making it all a bit more recent. So we have multiple time frames that we weigh the performance on, and that is a 22, a 44, and a 66 day time frames, where we are splitting it up, looking at 3 different time frames, and looking at which one of these different aspects performs the best. So that is what we have done today, and let's have a look at the results. You remember the last video, we had a Sharpe at 0.7, we have a max drawdown at 21%, CAGR at 10.85. Now in the new one here, where we have the dual momentum US multi look back, as we call it here, you can see that the CAGR The compound annual growth rate jumps up from 10.85% to 14.3%. That is a massive increase. And we actually see that the total return goes up from around 350% since 2008 and up towards 600%. So it's not double, but it is close. You can also see that the Sharpe ratio is going up from 0.7 to 0.97, which also a dramatic increase. The max drawdown is only 15%. So all in all, this is some very, very good stats. Now, if there is one thing you could focus on, of course, is that let me see, just the original here, the dual momentum. This year to date, it has had 21.5% about that. And in this new strategy, we only have 11%. But there will be a lot of differences from year to year on the different strategies. If we look down here with the new strategy, you can see that the monthly performance on this one is 1.21%. The average winner is 2.74 and the average loser is 2.12. There's also, and that is months, of course. The same with the quarters here. You can see that we have an average each quarter at 3.66%, and that the winning quarters are a lot larger than the average losing quarters. We can see the quarterly performance here, Q1, 2, 3, and 4. You can see the annual, the benchmark, and the difference. You can see that the only year this strategy had a loss was back in 2015, but it has underperformed the market a single year here, back in 2019 when it had a negative difference here, and also in 15 where it did a bit worse than the overall market. So that is some very solid stats here. You can see there are not many losing quarters. There are a few down here in the 14-15 where they had some rough years, trend following had some rough years there. So that is a very, very good improvement. Now we have had one more improved strategy here. And the thing about this one is that I can't tell you exactly what we have done. Not that we don't know it, but because what we have done here is that we have added a bit of our own special flavor here. Some of the stuff that we use for our fund and our different investment strategies of our own. And that is a bit of a secret sauce. It's just to show you that you can actually improve it even more. And as I said, this is some of the improvement that we use on a day-to-day basis in the fund we are setting up. But again, remember the CAGR, 14.3%. Max drawdown at 15, and a Sharpe at 0.97 here. Now in this Invest Like a Guru dual momentum, you can see that the CAGR has shot up even more to around 16%, giving us a total return of 752% over this time span. Year to date is around 16%, and you can see that the Sharpe is also up to around 1.05 here. The max drawdown is 16%, and you can see that the max drawdown in the other strategy here was 15.07%. So 1% higher here, but again with a higher Sharpe ratio, a better volatility and so on, that is definitely something I could live with. So this is to show you that you can improve these strategies. Now, what we are doing on our day-to-day basis in our work with the fund and our investment strategies is that we are trying our best not to curve fit the strategies, meaning that when you are curve fitting a strategy, you're letting a computer run X amount of years back and finding the best optimal settings, and that pretty much always leave you with a strategy that won't work from tomorrow, or at least sometimes in the near future. What we are doing in our work here is that we are stress testing everything we find so that we are making next to certain that we haven't curve fitted, that we haven't cheated. And we can see it because many of our strategies we have actually traded live, and they are working just as well right now as they did in history. So that is an important thing also to remember. Many of our strategies have been developed from taking a short time span. It could be something like from 2011 here. Let's just have my mouse work correctly here. From 2011 or 12, something here, and maybe to 2016, where we both have some ups and downs and sideways, and take the data set here and find some good settings. And then we back tested and tested forward, and we tested live with our own money to make sure that we just haven't picked a set of data that just were so lucky that it gave us the best results. So we are working on that constantly, making sure our models are as solid as possible. I should say that on this new one, Invest Like a Guru Dual Momentum, you will actually be able to follow on our website if you are a member. Here on the homepage, you can see, if you haven't seen it before, we have our momentum stock strategies and we have a single ETF strategy. Down here under ETF strategies will also be added our own dual momentum strategy that you can follow. You'll also be able to follow on a regular basis, where we are on our blog here showing what the original dual momentum is actually doing, so you can compare them. So members, and remember there's a 30 days free trial here when you go into the website. I'll put a link to that below. You will be able to monitor the new dual momentum strategy, and you'll be able just to copy it from our writings here. It reallocates once per month, so it is fairly easy to use. And we're looking forward to have yet another strategy in here. We will slowly be adding new strategies in here for the subscribers, so you get more and more to choose from and mix between if you want some different risk settings. That's all for today. I hope you enjoyed the video, and I will be back soon with new videos with new strategies that we are testing and trying to improve in our setup here. Thank you for now. Have a good new year and take care of yourself and your money out there. Bye for now.